It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady. Welcome to tax season 2016. This is January the 2nd. I was out on New Year's Eve, and it was about 10 minutes to 12, and I thought, gee, did I make all of my deductions? I'm taking out my checkbook and making sure I wrote those last deductions. But it's too late now, but we're going to help you with your tax situation. I know many of you are really happy because you're getting large refunds, and you're looking forward to getting those tax returns filed. And so we want to help you with what to do to make sure you get the largest refund, what all the ins and outs are. And I'm joined in studio with Tiffany Fabian. Hey, Tiff, Happy New Year.
Happy New Year. Yeah, I was a good girl on New Year's Eve. I went to my bank and did an extra mortgage payment or whatever, my mortgage payment.
Oh, my gosh, that is so good. You listen to
I
me.
do. And then I went online to one of my charities and I did a large deduction. So I have learned.
Great.
I was a good girl.
You were a good girl.
Yes.
And Christopher Fabian, your husband, were you a good boy?
I guess so.
Because she was a good girl.
That's right.
But we're all ready for tax season, right?
Well, yes, we are getting geared up. You know,
We want everybody else to be ready. 803-0930, 803-0930, star 930 on a cell phone. I just had somebody that just sent me an email about a house in Florida that her mother had put her name on the title prior to her passing, and it wasn't on a life estate, and so I had to write her and tell her that, sorry, but it goes back to mom's basis plus improvements plus your expensive sales. So she says, does it cost me anything? And would be the taxable gain. But if you have any of those kind of questions, you know, we are now getting ready to prepare taxes, get you your refunds, help you with your balance dues so that they aren't as much. And if you have any questions as you're getting ready to get your 1099s, et cetera, give us a call, 803-0930, 803-0930, star 930 on a cell phone. And we are going to keep you up to date on some of the changes. The first thing we want to talk about is getting ready for this year's tax season. Oh, and starting a week from Tuesday, we're going to be on WBBZ. So Ask the Tax Lady. This program is being filmed, and you get to see us and your questions live on TV on Channel 5.
Yep, pretty cool, which is so exciting. You get to actually, see what goes on behind the scenes.
You can see that we do this from the seat of our pants. We just,
and no more pajamas into work.
That's right.
Yes.
That's Tyler Stamer.
Yeah, that's
Hello.
right. And so we can't wear our pajamas into work anymore. Not that we do.
Not during tax season.
Yeah. Okay, let's see. I took a drink and I just went down the wrong pipe. Oh. All right. Something people need to know is the Treasury Department has extended the deadline for employers to provide proof to their employees that they were covered under an employer-provided plan until April the 1st, 2016.
Yep.
That is a big thing.
Yeah, because you broke it to everybody last week that you're going to get what form with your taxes, Chris?
A 1095B or a 1095C.
C.
Yep.
Right.
And that's going to outline that you had health insurance for the year.
And they have till April the 1st to get that for you. So
Right. And that doesn't mean people have to wait to April 1st to file their tax return.
But
that would be a crazy 2 weeks.
But if you weren't sure, like let's say that you were covered under a plan for 6 months, you'd want to make sure that 6 or 7 or 8 months, you want to make sure, because that is all it has to go into the computation as to whether you have a penalty.
Right.
For
Now
Obamacare.
it's the way the IRS can check to make sure you did have health insurance just by checking the box. Oh, yeah, I have it, like last year, and they never really checked it. Now they're going to get a form that says, yes, they did, and this is how long they had it. And
Right.
if you lied, they're going to catch it.
Right. And so that, again, has been extended till April the 1st. The other thing is the deadline to file this year has moved back. So this year it's extended till April the 18th after some.
Yep. Emancipation
Bostonian-
Day.
Oh, okay. I thought it was
Emancipation
Bostonian.
Day, which is the 16th, even though we end on the 15th. The 16th is Saturday, and our lovely government decided to celebrate it on Friday instead of Monday, so it gives everybody extra
So
days.
it's April 18th. So you get to go on your spring break with a lot more ease this year, right?
That's right.
The other thing is, I put down here, we write these little notes before we get on air. Don't be in such a hurry. We know you want your refund, but if you got unemployment or you had a second W-2 coming, and they just haven't gotten it to you by the 20th of January and you're just itching to get that tax return filed, what happens, you guys?
What'll happen, sadly, is that you'll have to do an amended return, and so it can change the outcome of your refund. And the worst part is that you'll have to either pay back some of the refund, or else maybe you'll get a little bit more. But the truth is, it's a real pain in the butt.
Many times they have to pay back part of their refund,
right?
And it can hold up the processing of your return. So, we know that you want to get it done, but the important thing is that you do a complete and accurate return. And so that might mean waiting an extra week, but I'm going to tell you, in the long run, it'll save you money. You'll have the correct return that's filed originally. You don't have to worry about amended returns, and that'll make your life a lot better.
And then, of course, when you amend the return, it's not just the federal that it affects the state.
New York
And
State.
if you file more than one state return, it would affect the multiple state returns.
Right. Then the other thing is, EG Tax, if you have your year-end pay stub, which was from last week, you can come into our offices, which are going to open up on the 15th, and we can get your preliminary return done with the pay stub. Then as soon as we get that W-2, you drop it off, and boom, we can get it done for you. So if you want to get ahead of the curve and you're sure you don't have any unemployment, no other investment income, or no Social Security statements, and you got everything, and you only have a pay stub, you can come on in, and we'll be happy to get you going with the pay stub. As soon as you get that W-2, then we'll get you going. Right?
That's
yeah,
right.
It's very convenient, very easy, and the nice thing is what the answer basically will be, and it really makes it easier.
Right, and then you can say to somebody, I know I got $8,000 coming, or whatever it is, because that's how the tax code is. This time of year, it's not just paying taxes. Many times, part of our job is to make sure that we give people money that they never paid in through the Earned Income Credit, or the Refundable Child Tax Credit, or the American Opportunity Tax Credit. There's many refundable credits that are out there, and many people that think they don't have to file because their income is so low, they're shooting themselves in the foot because they qualify for some of these credits.
Yeah, and another thing that a lot of people, even this time of year, the IRS never stops, or New York State are getting letters. Don't just pay what's on the letter. Is make sure you come in and talk to us, because a lot of times they're unfortunately not right, and so you just need to provide proof or answer the letter, and we'll type up a letter and get you proof.
They send you these letters as if you owe the money. But the truth of the matter is, it's really meant to say, we think you might owe the money based upon what we see. Then your response is, and your opportunity is to say, wait, that letter is incorrect, and here's why. And then the penalty or the balance due goes away, and sometimes you end up with an extra refund when you start investigating everything.
Right.
Okay, let's go to the phones. 803-0930, 803-0930, star 930 on a cell phone. And we got Mike in Batavia. Hey, Mike, how you doing? Happy New Year.
Happy New Year, Esther. How are you today?
Marvelous, marvelous. What can we do for you?
All right, I have a question. We recently changed employers.
Okay.
I want to know what date the employer I worked for 1 month last year has to have the W-2 postmarked by, and if they do not do that in the appropriate time frame, what government agency do I go to get my W-2s?
Okay, so first of all, you might find that there's not much teeth in this law, okay? So your employer is supposed to have your W-2 issued to an employee by what? The end of the
January
month,
31st,
right?
It should be postmarked.
Right. Now, if by February the 15th you still don't have your you can, and by the way, you can call the IRS, and it's really kind of a yawn. It's going to take 3 hours on the phone, and they're going to tell you to wait. But if you have by February the 15th you don't have it, you can do what's called a substitute wage and tax statement yourself from your pay stub, and you can actually submit your tax return without that W-2 using your pay stub as proof, provided you went after that employer and said, "Hi, this is Jack. or actually, it's not Jack, it's Mike. This is Mike. I want my W-2 and especially this is important for many of you who worked for employers who just completely are gone.
Yep.
So you really, it's January 31st, but February 15th before you can do a substitute wage and tax statement.
Okay, what kind of proof do I need to prove that I went after my employer? It was a joint venture that is dissolved, and nobody will, either of the two businesses that created the joint venture have stopped accepting and returning phone calls.
Well, it's not so much proof as it is going to be your pay stub. So on February the 15th, you can do a substitute wage and tax statement, file your return. Then they go after that employer who actually would get a fine up to $10,000 for failure to submit timely payroll reports and 50% of the taxes that they didn't pay in. So it's quite a substantial penalty.
Mike, do you still have a pay stub from them where you worked?
I do, but there were over 200 employees, and I'd be willing to bet a lot of them don't. Now, are those fines per employee or just a one-time fine for the whole?
It's a one-time.
I think it's a one-time fine, but you got to understand 100% of the liability not paid in. If there was 100 employees and they were supposed to pay in $200,000 and they didn't pay it, then their penalty is going to be $10,000 plus $200,000. It's a big penalty.
Okay. Well, I appreciate your time. Have a happy New Year.
You're very welcome. Happy New Year. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Love to hear what you have to say. We're going to take a short break, be back with some more things you need to know for 2016 and your phone calls. From EG Tax. And Tyler, I have no idea. Who was that?
That was The Replacements.
Well, see, and I said to you before the show, I said, go easy on me.
That was
Tyler.
easy.
That was not. I don't know The Replacements.
I know the movie.
They're slightly better than the movie.
Mr. Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. We're talking taxes. This is the first day of 2016. We want to help you so that you don't overpay. We're kind of affectionately calling this your tax refund season. And for those of you that owe money, as I do, we wish we had refunds, but I don't want to
not
pay
really
my taxes. So yeah, that's right. So we're going to help you to minimize whatever it is and maximize your refund. Okay, the other thing is Obamacare penalties are going up this year to 2% of your adjusted gross income, 2.5% next year. People can still get health insurance, correct?
They still can get health insurance. That's correct. And the penalty is if you don't have it for more than 3 months.
Right.
So even if you don't have it for January, get it in February. Get it in March. Then you still don't get hit with the penalty. And there's the Medicaid you can qualify for some people. There's the essential coverage, the new thing that came out that's like $20 a month. That's a step in between getting full insurance.
See, the worst thing, don't you agree, Chris, is the worst thing is when you assume you know, so you never make the call. And I will tell you, part of what EG Tax does is we hate to be the bearer of bad news. It's a terrible thing to sit in front of somebody and say, oh, you owe $1,000 because you didn't have health insurance. We want to help you, so we have our very own navigator. We're so blessed to have Tim as our navigator, and he will help you, and there's this gigantic charge of nothing. We don't charge anything.
Yep. I mean, I took a call this week, and this guy was like, yeah, I had a baby, or my wife had a baby.
I would think so.
This year, it added to our family size. And before the baby, we were above poverty level. Now we're below poverty level. And so now we're not going to get any money back on our taxes because it says if you paid too much, if you didn't get enough subsidy and you drop below I said, no, you're wrong, sir. You're going to get, because the tax return is the check and balance. So now, because you have the baby, you're going to get a lot of that money back that you paid.
And, you know, don't let this poverty level thing throw you. I mean, quite frankly, for a family of 4, it's over $100,000.
Right, the 400%.
So, you're living in a nice house. You got a nice car. You got a good job. Your wife's got a good job. And you make over 100, just over 100. You're considered it's 400% of excess over poverty level, and you can still get subsidies. And that's what we know that you don't, and we would love to help you with. So again, when you need help, or if you don't know if you need help, or you just have said, I don't even want to listen to this because I don't want to have health insurance, I'm going to tell you, sometimes what you've pre-decided is the worst thing you can do to yourself.
Another letter that we've been getting lots of is the IRS telling people, we think that you should have filed a tax return because you had a 1095-A, but you didn't file a tax return. And so I did one the other day. He's like, I don't have to legally file a tax return, but it doesn't matter. He got a big refund from the excess, from the subsidy that he paid in his portion.
People don't realize that there are thousands and thousands and thousands and thousands of people that get refunds because of their situation, be it because they have a part-time job and they're under the age of 65 and they get an earned income credit. Maybe they're in college. I mean, there's all these things where they give you money that you didn't pay in, and that's part of what we'd like to educate you about. The other thing, before we go to the phones, again, 803-0930, 803-0930, star 930 on a cell phone. I'm Esther Gullius, the tax lady from EG Tax, with Tiffany Fabian, Christopher Fabian. We want to help you. That's our job. I don't want you to overpay. Tax brackets have increased slightly for
inflation.
Inflation. I was going to say appreciation, but it's not appreciation. Inflation.
Well, they appreciate it, the government.
The standard deduction is up to $9,300 for head of household. Single and married joint stayed the same. Personal exemptions are now $40.50, so you can have a child that's over the age of 19 that made less than $40.50, and you can still claim them as a dependent if you provide over 50% of their total support. So that's this year. Health savings account contributions are up to $33.50 single, $67.50 married filing jointly, and the catch-up provision is $1,000 for people over the age of 54. Now that's weird. Now why didn't they make it 50 like the other catch-up provisions?
Yes.
You know, I know. What can you do?
Yep.
The earned income credit is rising. 3 or more qualifying children, you now get a maximum credit on the federal of $62.69, and the state of New York would give you another 20% of that, right?
Yep.
So that's another $1,600. So you get about $8,000 if you have 3 children, and your income is like under $17,000, right?
Yep, and plus with the extenders that were just passed, this was just made permanent. The 3 or more children for earned income credit. So
really, with the earned income credits, you go from $17,000 to $25,000, and it's all tax-free income, right?
Yep.
Hello. Okay, earned income credit. Alternative minimum tax exemptions this year are a little higher, $53.9 single, $83.8 married filing joint return, so you don't have to worry about paying alternative minimum tax if you're below those figures. Estate tax exemption has increased this year to $5.45 million, so there's not too many of us that are going to have to worry about that. But the estate tax, but which is really important. Many times people think that upon their death they're going to have to pay estate taxes. If your estate is less than $5.45 million, you don't owe any estate taxes.
Right.
And the state of New York is kind of following suit. It's up, and it's coming to that place. I think it's around $3 million right now at the state of New York.
Yeah, and by 2017 they'll be up to the federal.
Right. So you're not going to owe any estate taxes. So many people are worried about what it's going to cost their heirs upon their death. The truth is, it's not going to cost the heirs anything. There isn't going to be any estate taxes. What you need to worry about if your estate is under that is the possibility of nursing home, which is much more than the estate taxes could ever be.
Yeah,
right?
they're 100%.
Right.
Basically.
All right, let's sneak in a couple calls here before break. The news, 803-0930, 803-0930, star 930 on your cell phone. And we got Bill from Clarence. Hey, Mr. Bill, how can we help you?
Hi, sir. Thanks for taking my call, and I think you
right.
just answered my question.
What's that?
My
You got an estate over $5.45 million, Bill?
No, I wish. But if I'm a recipient of an estate, a gift in an estate, is that taxable?
It all depends. See,
gift.
now, the estate, there's like, when somebody passes away, all right, the total amount of their assets on the date of their death could pay an estate tax return, all right?
Yeah.
But if the estate is less than $5.45 million, it's not going to pay anything. However, the heirs who receive the principal from savings accounts or the stock, okay, and the at the date of they inherit the stock, it's the fair market value at the date of death. So if they sell it the next day, there's going to be no taxes on unless there was a really good day in the market, on the sale of stock or the cash they get. However, if they inherit an annuity or they inherit a pension or they inherit an IRA, that's a horse of a different color, right, guys?
Yep. So the next question would be, how was the money given or distributed to you?
What was it that you got? Did you get an annuity? Did you get an IRA? Did you get a pension?
The way the will was written, it was just X number of dollars, period, for me, and the rest of the estate went to another person.
All right, so there's no annuity, no IRA, it's just cash.
Yeah.
So, Bill, you get to go out this afternoon and have a great dinner because it's going to not cost you anything.
That's wonderful.
Yay. Good
Thanks
news
very
for
much.
the
Another
16.
step ahead.
All right. Thank you, Mr. Bill. Thanks for calling. I'm Esther Goulias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. Give us a call if you have any tax-related questions. As we go forward during tax season, you're going to see that we are not only doing Ask the Tax Lady on WBEN, but we're kind of like, I guess you call it, not really simulcasting it, but we're taping it for a live broadcast on WBBZ on Tuesdays at 6:30. So we'd love you to become part of the program.
Not to mention that Florida
news.
starts soon, too.
That's right. And I got a break for news. I'll see you on the other side. I'm Esther Goulias, the tax lady.
Be a lady tonight.
That's for you.
Okay, Tyler, you really scraped the bottom of the barrel.
I had to do something for you.
Well, thank you, Tyler Stamer. I'm Esther Goulias, the tax lady. And, of course, that was, who was that? That was not Frank Sinatra. It was Ben, no, not Ben. No, it was Frank Sinatra.
Yes, it was. Congratulations,
Anyway,
Esther.
he says, let's see, I got to find something old for Esther. I'm Esther Goulias, the tax lady. Happy New Year, happy tax season, happy refund season, and we want to help you to make sure that you do the best you possibly can. And just, our commercial says that we're the number one tax firm. And, I don't want you to think that just because we have so many offices that you're not going to get individual attention, but you really will. And we do stand behind our work, and we really care about you. So this year, before you sit down at your computer and think that you want to turbo it, I'm going to tell you, for slightly more, and in many cases less, you can get it done professionally with our guarantee. So
Right, and we're in Newfane this year. Don't forget that.
Yep.
And like us on Facebook or Twitter for your
'cause
chance to get
we give a gift certificate.
every week. We're going to give a gift certificate for people who like us on Facebook or Twitter.
My husband said to me the other day, "What do you mean when you like somebody?"
Don't you like people all the time?
I said, never mind, Bill. Okay, we got to go to George, who's been waiting from Watkins Glen. He's such a patient man. I'm Esther Goulias, the tax lady, 803-0930, 803-0930, star 930 cell phone. And Mr. George, what can we help you down in beautiful Watkins Glen?
Oh, I got an easy one for you. I got
We're
an
ready.
older son living with us.
Yep.
He's trying to get disability. He's been out of work for over a year.
Mm-hmm.
I assume I'll get. I can use him as a dependent.
Okay, let me ask you this. Can I ask you a couple questions, George?
Submit a tax return and
Hang
for
on,
the
George.
state and federal.
Hang on, George. So, do you and your wife work?
No, we retired out of Rochester. I used to go to Batavia for my tax, your tax
All right,
lady there.
so you retired. You're strictly on you're on regular retirement. You didn't retire on a disability, did you?
No.
Okay. So your son is how old?
Oh, he's 50.
Did he make more than $4,050 last year?
No, he was completely unemployed.
All right, so you're going to be able to claim him as a dependent on your tax return. Do you and your wife still file?
What, last year?
Do you have to file a tax return?
Oh, yes, huh?
Yeah, okay, so you're going to be able to claim him as a dependent.
Oh, okay.
So that'll be a good thing.
But I think you had more to the question, too, didn't you say, George? Or something?
Yes. What does he have to do? Does he file a tax return for state and federal?
Did he have any income at all?
None at all.
Then there's nothing he has to do.
Well,
No.
how do they know that he's
George,
not working?
They know.
No.
George, they know. You know, they say Santa Claus knows when you're sleeping and you know when they're awake. Believe me, the IRS knows.
George, whatever you get in the mail, the IRS gets in the mail. So as long as he has no income statements coming in, they know he has no income.
They know.
But the question, George, I have for you is, does your son have Medicaid through the exchange for health insurance?
Ah, good question,
Yes,
Chris.
He does have Medicare.
Okay.
Yay.
No, Medicare or Medicaid?
I'm sorry, Medicaid.
Through the exchange?
Okay.
Yes.
Okay, you may not want to claim him because if you claim him,
that's
he
true.
doesn't qualify for Medicaid.
Medicaid.
Yep, very good point,
That's
Christopher.
I didn't realize
Because
that.
it's the number of people filing the people on your tax return. And so what Chris is pointing out, and it's very good that you did it, Chris, is that your income may disqualify him for Medicaid.
Oh.
And so the cost
what
of
you want to
insurance
do is,
would
George, give
outweigh.
us a call on Monday and ask to talk to our navigator so
Tim.
he can navigate Tim Eliason. He can help you to navigate this to make sure you're not shooting yourself in the foot. I mean, you may save $400 in taxes on the right-hand side, but on the left-hand side, he's got to pay $4,000 in health insurance. So you want to make sure that you do what's best for you.
Okay. All right. Very good. All
right, thank
is there
you.
anywhere I can read about this?
New York State
It's
Health.
like reading Sanskrit. I mean, you can go to New York State Health. What a Department of Health, New York State.
New York State of Health.
New York
That's
State of
it.
Health.
New York
That's
State
it.
of Health.
Thank you,
I
Tyler.
listen to the show a little bit.
New York State of Health. So
Okay, well,
New
I
York
will
State of
call
Health,
Tim then.
but see, the whole thing is when you claim somebody as a dependent, now the household income then becomes part of his ability to collect Medicaid.
Okay.
So it may cost you a little money in federal taxes, but it saves him thousands in health insurance.
Okay. Very
Okay?
good. I understand now. Thank you
Okay,
very much.
sir.
I'm glad you told me.
I'm glad we did too.
Yeah.
That was good. Good save, Chris.
Thank you.
Good save, Chris. Okay, let's
Out
see.
of the
We're going to
bullpen.
go to other things. When you're doing your taxes in any year. You want to make sure that you're preparing for next year, especially when you're sitting in front of your tax advisor. That they would say, okay, so next year I see you have a 16-year-old. Next year you have a 17-year-old. Your tax bill is going to go up $1,000.
That's
next
right.
year.
That's right.
So,
Maybe your
I mean,
child is going
as
to
you're
become
working
17.
with your tax advisor, you want to make sure that they're helping you to get ready for 2017.
Yep. Maybe, like I said, a child is turning 17. Maybe somebody's entering college. Maybe somebody's done with college. Maybe you're going to lose a dependent. I had a client come in the other day, and she got Social Security disability, and she got back Social Security disability. So she's going to have a large refund. We're going to do a lump sum election. But you want to make plans
Right,
for
you
what's
really
coming
do.
up next.
I mean, there are so many things that taxes are obviously very complicated, and so when you're working with your tax advisor, make sure that it's not just this year that they're talking about, but getting you ready for next year. Like, for instance, let's say you're retiring this year, and you're starting to collect Social Security, and you aren't taking any money out of your IRA, and you think that's because I want to wait for my IRA till later. But you can take many times $15,000, $20,000, $18,000, $20,000 out of your IRA tax-free if you're filing a joint return, because you're not going to pay any liability. So that's just part of what you should be planning for, not only 2015, but 2016 going forward, right?
Right.
All right, why don't we go back to the phones, and we're going to talk to Raj in North Tonawanda. Hey, Roger.
Hi, I heard you mention this, and I didn't hear the amount. What's the maximum earnings married filing joint before the alternative minimum tax kicks
Okay,
in?
hang on for a second. I just got to go back to my 83.8. Well, that's the exclusion. The exemption amount is 83.8. So anything under 83.8, and you're good to go.
For married filing joint.
Married filing joint.
That's after your standard deduction and your personal exemptions.
This is AMT subtraction. 83.8.
Oh, I can have a standard deduction that high.
Yeah, no.
No.
The alternative minimum tax is an alternative way of computing your tax liability.
Okay.
To make sure that you're paying taxes at least 26%. So it really has nothing to do with your it's actually adding back your standard deduction and personal exemptions and all of your itemized deductions. And if your income is less than 83.8, you won't owe any alternative minimum tax.
And if it's over 83, you will.
Well, no, not necessarily. Well,
okay.
It all depends if you itemize.
It's a comparison. So you take a look. Let's say your liability is $4,000. All right, itemizing it. But then you do your AMT, and your liability would be 3. So you either pay taxes at the 4 that was originally computed or 3 that came from the AMT, whichever is greater. So what you've already paid, but if AMT comes out to 5 and your normal tax liability is 4, you're going to pay the extra $1,000.
Okay, so you got to figure it both ways.
You do have to figure it both ways. Yeah.
Can I ask real quick?
Yeah.
What can a child dependent earn before you can't claim them as a dependent?
It depends on their age and whether they're in school or not. How old is your
19
child?
and in college.
Pardon me?
19 and full-time in college.
All right, so the only thing is they can't be supporting themselves. There is no income limitation.
Okay.
So as long as you're furnishing over 50% of their total support and they're under the age of 24 and a full-time student, which means they're in college at least half-time for at least 5 months out of the year or more, then you can still claim them.
Thank you very much.
You're welcome.
Yep, I know.
I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on the cell phone. Before we take our break, I wanted to make sure that people understand that your tax bracket is really important. Why would that be important?
Well, your filing status?
Your filing status.
Your filing status, because your filing status helps determine what tax bracket you're in and what credits you're eligible for, depending on your income.
So what does that mean, Chris? What is your filing
It means
status
by marking the wrong box, you could cost yourself $4,000.
Like whether you're married filing joint or married filing separate,
or had a household, or qualifying widower,
everything in tax code is driven by what your filing status is.
Correct. Yep.
Your deductions, your tax bracket, your AMT. So if you are somebody that, for instance, were living with your spouse until March, and you're still legally divorced, still legally married as of December 31st, but you were the person who had the children in their home, then there's kind of this magic thing that you're considered single for tax purposes and head of the household, and this would mean that you get to go from married separate to head of the household, which is a gigantic loophole.
Oh, yeah, huge, wonderful. Because then if you're that person who claims head of household, possibly you get earned income credit, child tax credit, the list goes on and on. Now that other spouse would have to file married filing separate, but you could file head of household.
Right. That's we had a client that we were working with last year, and she thought she had to file married filing separately, but we were able to get the whole. Actually, we were part of her court proceedings, and we were able to get her so that the judge understood that she was head of the household, and it got her like $25,000, and so it's a wonderful thing.
And that goes back to that old onus. My lawyer said, my broker said, but the truth is, if you do taxes, that's all you do all day long, and we really know the answers. And so take another.
You can call us, and we don't charge you. We really want to help you. Well, I'm Esther Golias, the tax lady from EG Tax. We're going to take a short break. 803-0930, 803-0930, star 930 on the cell phone. Sam and Joy, we'll see you on the other side, and we'll see you too.
Goodbye, Joe. Me gotta go. Me oh my oh. Me gotta go.
I mean, that's so bad, Tyler. I don't even know who that is. That's like, it's like.
Oh, come on. I didn't know if you were a country fan when you were younger.
Well, I don't think 90 years ago I was.
Willie Hort.
Who is that?
Oh, no, that is Hank Williams.
Hank Williams.
Hank Williams. All right, this is the Hayseed Esther. Y'all come on, get your taxes done.
Larry would be very happy.
All right, I'm Esther Gullius, the tax lady from EG Tax. That is not our theme song. But I wanted, before I get back to all my calls here, wanted to thank Went Propane. They are really great people. And if you need propane, they have great prices. Dennis Kitchen, who's a loyal advertiser of EG Tax, on EG Tax, ask the tax lady. And if you have any, he's a wonderful guy. And Bill Barber, who, again, is another loyal, one of our sponsors, who bring you Ask the Tax Lady. And they're great guys, and I will tell you, I wanted to give them a shout-out the second day of January to say thank you for being so loyal and faithful. And I'll tell you, you won't be disappointed if you use any of them. Okay, what should we do here? 8030930, 8030930, star 930 cell phone. I think we got Joy from Buffalo hanging. Hey, Joy, how can we help you?
Hi, Happy New Year.
Happy New Year to you.
We have a son that will probably be attending college in the fall.
Okay.
And today I looked at the FAFSA application, and I'm just wondering is there, because this is all new to us, is there like a minimum or a maximum amount parents' total income should be in order to hopefully get some scholarship funding through FAFSA?
I mean, really, it has to do with the college. It really does have to, and whether
so it's not like
other kids in college in your household, but it really is just something you have to do.
Right, we're doing it.
Yep. I mean, it depends on the price of the college. It depends how many members are in the household
are in college.
How many members of the household are in college. It also does the application for student loans is another thing that it will do, where you don't then have to go search for student loans. It will automatically do those also.
Okay.
And if you need any help, EG Tax will help you with that at no charge.
And another thing, Joy, is when you're taking the college credit too. If you make too much money, you're kicked out of that. So,
that's what we weren't sure. I mean, we're total income is not really even that high. It's under like $130,000, but maybe that is high in the scheme of things.
For AOTC.
Not for the credit.
For AOTC.
For credits, you'll be okay.
You'll be fine.
The income tax credits, but again, that's when your child starts going to college.
Yep. And so you should be fine with the college credits for the tax return for the federal and the state. But Chris said it's really important. We have a daughter who's in college, and you got to do the FAFSA every year because it'll help guide not only the amount of funding you might get from the colleges, but also student loans down the road.
We're going to talk about in a minute. We're going to talk about forgiveness on student loans, too. But, yeah, if you need help, Joy, we'll be very happy to help you. So just give us a call at 632-7886. Okay?
Got it. Thank you.
Thank you, dear.
Okay.
All right, and we got Sam from Cheektowaga. Hey, Sam, how can we help you?
Hi, Esther.
Hey.
Happy New Year to you
Happy
and your
New
crew.
Year to you.
Thank you. Unfortunately, it's not so happy, but my wife passed away early last month.
Oh.
And my question is, will I still be able to file a 1040
joint return?
Joint return as we've done.
Yes. Do you have children at home?
No, we do not. No, I'm old enough to be a Hank Williams fan.
At least we got you to laugh. And I'm very sorry to hear about your loss.
Thank you
That's
so much.
a terrible thing. But yes, in the year of death of a spouse, you're going to be able to file a joint return. If you had filed joint returns, were legally able to file a joint return in the past. So you will file a joint return. Next year, however, 2016,
I know that's a whole
then you're going to revert back to a single taxpayer. So you want to make sure that you adjust your withholding from your pension plans so that you understand that you're going to lose half of your standard deduction, one personal exemption.
Absolutely.
So that's something you got to put into the mix.
But the standard deductions that we were used to up to this point will be applicable
this year.
for 2015.
Yep, you're good to go.
And without having a tax form in front of me, I know there was a signature aspect down at the bottom of the form where it asks for your signature and your spouse's signature. What do
You're going to sign again, and underneath it, you're going to write surviving spouse. So you're going to sign both places, the taxpayer and the spouse, and under the spouse, you're going to indicate and write surviving spouse.
Surviving spouse. Very good.
All right.
Well, thank
Sorry
you,
to
folks.
hear about your loss.
Thank you again, Esther.
All right.
And thank you for your help.
All right. Thank you, sir.
Bye-bye.
That's so sad, isn't it?
Yes.
That's so sad. I'm Esther Galias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. And we got Kathy from...
Buffalo.
Oh, it looks like
Hello?
Kathy from Bally.
Yes.
That's not from Bally. That's quite a ways away. Hi, Kathy. How can we help you?
Hi. Thank you for taking my call. I have a question for you. I was disabled and I had to retire early. So my income consists of Social Security, disability, and a small pension to the total of about $30,000.
So, Kathy, how much is your pension?
Altogether, it's about $1,000 a month.
So $12,000, right?
Yes.
So are you single or married?
I'm a single homeowner.
Right, and you're under 65?
Yes.
All right, so give Kathy the good news.
Well, you don't, basically your income's going to be very low, where your taxable income is going to be next to nothing. So your tax is going to be pretty much zero
but
for the
income credit.
And you will get for a single person, very little earned income
But
credit.
she will get an earned income credit.
Yep. So that could wipe out your tax.
And if she puts money into an IRA, that would increase her earned income credit, would it not?
Well, here is my question. Two things. One, I have had about a $6,000 a year this past year in medical expenses. Can that be tax deductible?
Well, see, your medical expenses would have to exceed 10% of your adjusted gross income. So it sounds to me like you're going to have very little liability, if any at all. It sounds like you're going to qualify for the earned income credit because there's an exception to what's considered wages for somebody that retires prior to normal retirement age, which you did. And so basically it's going to be considered wages. So there's a couple little tricks you can do with the IRA, and possibly then you'd get the pension savers credit. So what I'd suggest you do, Kathy, is give us a jingle so we can go over your stuff specifically, because over the phone it's, over the radio it's a little, at 632-7886.
I've been your customer for a number of years.
Oh, good. Well, then call us so we can help you.
Thank you. That I will.
Thank you, dear. Bye-bye.
Thanks,
and
Kathy.
Last but not least, we got Phyllis from Niagara Falls. Hey, Phyllis.
Hi.
Hey, Phyllis. How can we help you?
Well, I have a question regarding an LLC. I have several income properties, and I know an LLC will help me with liability. And this is all new to me. I try to get an answer from lawyers, from accountants, and from bankers, and nobody seems to be able to guide me as to whether it's worth it to put these income properties into an LLC, because I do know then we have to do a lot of taxes like quarterly, and then that...
No, that's not necessarily true, because an LLC is going to be reported on a Schedule E.
As long as it's a single owner.
Or single owner. You're a single owner, right?
Pardon me?
Are you a single owner?
Of the properties?
No, single owner. 2 are deeded under the LLC, and the rest are deeded under myself.
No, but who's the owner?
Husband.
Who's the owner?
We are. So 2 are deeded under the LLC, which we are the president and the vice president, and then the rest are deeded under just our regular name.
All right. So if it's a single owner, it just goes on Schedule E or normal, okay? But the thing is, it's to protect, all they can go after is the asset, as opposed to you and your husband personally. So, I think it's worth it, but it's, just up to you and your husband as to whether you want to do once you jump through the hoops one time and you get it all set up, it really is a good thing for protection for you, because you never know when you're going to need the protection.
Well, I already established it, and I went halfway, so you're telling me go the full way.
I would, because, again, if anybody, it's a litigious society. We're New York State, where attorneys are all over the place, so you want to protect yourself as much as you can.
Okay, you'd be able to guide me if I came to you on how to...
Just give us a call. We'll be very happy to help you over the phone, no charge.
All right, thank you.
Thank you, dear. I'm Esther Goulias, the tax lady from EG Tax. I just wanted to direct people to the New York State Loan Forgiveness Program for New York State residents. There are a bunch of loans that can be forgiven, student loans that can be forgiven for multitude layers of people that are working as teachers, attorneys, social workers. If you're in that kind of a position and you are worried about having your loan forgiven, New York State can really help you out, and EG Tax will help you out. Until next week, I'm Esther Goulias, the tax lady, with Chris Fabian, Esther Goulias, and Tiffany Fabian. Call us if you need us, 632-7886. Until next week, bye-bye.